Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 11th of January 2016 and we're suggesting to our viewers and subscribers that they follow the Chinese market, especially its manufacturing data, very closely. It would be a mistake when considering purchasing precious metals to completely ignore what is happening in China. The World Gold Council announced that gold demand from China exceeded that of India in 2013, and there is no doubt that between them, being the largest and second largest importers of gold and silver, their demand requirements are hugely significant in world terms. A further slowdown in China's vast manufacturing sector has intensified concerns about 2016 for the world's second largest economy. Against the backdrop of a faltering global economy, turmoil in the country's stock markets and overcapacity in factories, Chinese economic growth has slowed markedly. The country's central bank expects growth in 2015 to be the slowest for a quarter of a century. After growing 7.3% in 2014, the economy is thought to have expanded by 6.9% in 2015, and the central bank has forecast that it may slow further in 2016 to 6.8%. A series of interventions by policymakers, including interest rate cuts, have done little to revive growth, and in some cases served only to heighten concern about China's challenges. Its recent cut has seen the Chinese stock markets plunge by 7% on both Monday and Thursday of last week, creating havoc throughout world markets and significant falls in many countries. The official Purchasing Managers Index, PMI, of manufacturing activity edged up to 49.7 in December, compared with 49.6 in November. The December reading marked the fifth consecutive month that the index was below 50, the point that separates expansion from contraction. According to Zhao Qinghe, a senior statistician at the National Bureau of Statistics, quote, "Although the PMI slightly rebounded this month, it still lies below the critical point and is lower than historic levels over the same period." Unquote. Despite the more positive news from the services sector and housing market, economists are worried that a weak series of PMI survey readings from the national statistics offices and polls carried out by the private sector point to GDP growth that is slower than official estimates suggest. Economists expect more stimulus measures in 2016 as Beijing seeks to boost demand in the economy and shore up confidence among Chinese and foreign investors. Leaders have pledged to expand the country's budget deficit this year to help boost growth with more government spending. After a global rout in 2015, many analysts expect prices for commodities such as oil and metals to remain volatile this year, increasing uncertainty for China as a big producer and consumer of raw materials. China is also grappling with a slowdown in neighbouring emerging economies that are important trading partners. Those countries in turn are under pressure after the recent move by the US Federal Reserve to raise interest rates for the first time in almost a decade, causing knock-on effects in currency, bonds, and stock markets. So should Chinese growth reduce further than many anticipate, then this will undoubtedly have an impact on demand for silver. Quote, "I think if we do get GDP starting to point well below 7% for the next few quarters, then it will affect retail spending and wages, which will further erode purchasing power for precious metals, unquote. Victor Thiampiria, commodity strategist at ANZ Bank in Singapore, told the Economic Times last August. Our view is that in the event of a continuing slowdown, demand for silver will reduce, and this will put further pressure on its price. We can still see, to some extent, China's central bank buying gold in order to hedge its exposure to US dollar-denominated assets. However, domestic demand for gold could also possibly reduce. We believe, though, the greater fall will be in silver, certainly as a percentage. So we suggest that you watch this market closely, and India too. And to some extent, they will give you an indication of what is likely to happen in the months ahead. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website regularly at www.illuminatisilver.com. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.